Hello, welcome to another version of Frequently Asked Questions with Sean and Jesse. My name is Jesse Rivera. I'm a mortgage broker in the beautiful state of California.
And I'm Sean Young. I'm based out of Miami Beach. I'm licensed in 45 states.
Now, today we're going to talk about a different type of loan. It's kind of outside the box, but it's a great alternative. It's called a bank statement loan. Sean, what are they?
Yeah, so a bank statement loan is just like the name implies, is it's a loan where we use your bank statements to qualify you for a mortgage based on whatever income you show flowing through your bank statements, rather than using your tax returns, or W-2 certainly. But we'll discuss that a little bit further as well.
Right. Yep.
So
That's
yeah, who
right.
are they good for then, Jesse?
Mostly for self-employed.
Yeah,
If you're
yeah.
self-employed and have a hard time getting a regular conventional mortgage, this is a good alternative to look at. A lot of self-employed people, a lot of business owners love to write off deductions, and that's
Mhm.
fantastic.
Yeah.
I mean,
I
if
mean,
you
that's
write
the
off
whole
those
point of being
deductions,
a business, right?
yeah, that's part of it. That's
Yeah.
the big part. So you don't have to pay a lot of taxes at the end of the year. That's fantastic, and then a lot of accountants are very creative with that, which is
Yeah.
fantastic. Yeah, I mean, it lowers your tax payments at the end of the year, but there's a trade-off, right? When it comes to qualifying for a loan, on paper, you're not making a lot of money, so it's harder to qualify. So that's where the bank statement comes in, for self-employed, for gig workers, for independent contractors, even for people who've gone from W-2 to 1099. Oh, I just knocked over my microphone. Hold on a second.
Yeah. Yeah.
If you've gone from W-2 to 1099 and starting your own business, and usually you need 2 years of being
Sure.
self-employed to qualify.
Yeah.
This is a good alternative for that. Um, and we were talking about before we started the video. Are there any circumstances where a W-2
Yeah.
employee, a regular employee, would need
Right.
one of these?
Yeah,
And
there's not.
no, yeah,
Yeah, yeah, and there's not. Yeah, that's what we came to. Right,
yeah.
there's
Oh, the
not. It's
only
a
well, we did
side
come up with
hustle. Yeah,
the if you haven't done your taxes.
yeah, you're right. Yeah, you're
If you
right.
haven't done your
Absolutely.
taxes in the last few years,
Yeah.
because you really you really don't look at your taxes when you do these.
Mm.
It's just mostly
Yeah.
bank statement. And that's a benefit of it. So it doesn't
Yeah.
matter what your net worth is on paper because they're going to look at your bank statements.
Mm.
Um,
Yeah, for sure. So,
so
so something I wanted to talk about real quick, Jesse's. I just wanted to kind of touch on. I think a lot of people, even people in our industry, they hear the bank statement loans, and they think, "Oh no, like I saw this play out in 9 and 10, when everything crashed because we had all those stated income loans, and we had people that were leveraging 9 and 10 houses all on stated income. Well, this is not that.
right,
Okay, there's so much more government compliance and regulation and oversight that we have to adhere to.
right.
This is not that at all. This is a much different thing entirely. This is there's just so many hoops and hurdles that we have to jump through. There's so many more restrictions on DTI and what we're
Mhm.
showing here, and there's I mean, even all the systems that track all of the houses people own and the mortgages they have holding over them already. All of those are in place to make sure there's not people over leveraging out, to set us all up for failure like
Yeah,
that.
and that's a great point. Back in the day before
Yeah,
2007, you could fog a mirror and you could just tell your mortgage
yeah,
broker, I make $120,000, and they would
yeah.
believe you and you would get a loan. Not
Right.
anymore.
Yeah, yeah. The same thing happened for me. I mean, I had just come off active duty in the military, and I started a construction company,
Really?
and I had just cashed a fat, $19,000 check. And at 20 years old, I thought I was a rock star. And my mortgage broker at the time, who has since fled the country, so what's that tell you? he, you know, he's like, "Well, how much do you make?" And I was like, I don't know. I just started my business. I mean, I just cashed my first check. It's 19 grand. How much
Yeah.
do you need me to make? I have no clue. And he's like, don't worry about it. I'll figure it out.
Wow.
And
Yeah.
that was it. That was
Yeah.
my stated income loan for my first home. So
Wow.
yeah,
Yeah. Okay.
pretty
No,
wild.
we're not there anymore. I bet a bunch of those guys who were working back then, who had big houses and boats, all that stuff, I bet they're all
Yeah.
working at Starbucks now.
Or maybe
Those
they're
mortgage
hiding.
brokers.
Yeah, or maybe they're hiding in Thailand like my mortgage broker is.
Exactly.
Yeah,
Exactly, right?
yeah, yeah.
Calculating the income is a little bit different for a bank statement. Like I said, we don't look at your tax returns. So they actually you can do a 12-month bank statement loan or a 24-month bank statement loan, and they look at how much income is actually going into your bank account through your bank statements. So there's two ways of looking at it. If you use business bank, if you have a business and have a business banking account, they look at your business banking statements, and if you're making $10,000 a month, they'll take 50% of that. So they'll take $5,000 a month is how much you qualify, and they'll average that out over the 12 months or 24 months, so that they get an average of the 12 months, and that's what we
Yeah,
use.
that's a great point too. A lot of folks don't realize that you
Oh,
can do. There's a 12-month program and a 24 months, depending on
right,
what we need to do for you.
right,
They,
and
they
then
have their advantages and disadvantages for
yeah,
sure.
and that's another point. If your income is seasonal, right?
Mhm.
Because
Yeah,
I did a bank statement loan for a woman who owned a tree farm for Christmas trees.
right.
So she made
Yeah,
a ton of money in November, December, and January, and then the rest of the
yeah,
month she didn't do a whole lot.
yeah,
But we could average that out over the year, and
yeah.
she, use that income. So that's another good use of the bank statement loan. But if
Right.
you don't have a business bank account and all the money, if you're like a gig worker or something like that, or independent contractor,
Mhm.
and all your money just goes into your personal account, uh, we just use all of it. So if you get $5,000 a month into your personal bank account, that's what we use,
Mhm.
$5,000 a month. But you have to realize we also look at your credit report and what your liabilities are. If you have an auto loan, if you have student loans, credit cards, I mean, we'll have to. It's the same thing as a regular loan.
Mhm.
We'll deduct those as
Yeah.
well. So there is a debt to income ratio. There
Mhm.
always will be, and that there is one for this loan as well.
Yeah. So great. I think that just about wraps it up for this one, doesn't it, Jesse?
Well, there are a couple trade-offs. The bank statement
Oh,
loan isn't perfect, right?
okay. Like what?
So,
What are they? Let's hear them.
you will. It's a higher interest rate.
Hmm.
You're going to take a hit on interest rate because lenders look at risk when they're originating a loan. So your interest rate is going to be higher, and
Hmm.
sometimes it's going to be significantly higher. Maybe a point, 2 points higher, 3 points higher. But it might be worth it for you if you want to buy a home. If you need to refinance, it might be worth it for you. Even especially if you can refinance in a couple of years once you get things settled, right? Um,
Right.
and the other one is you're going to need a down payment. You're going to need minimum 20% down payment. There's no 3% down payment. There's no 5% down payment with a bank
Mhm.
statement loan. So you will need a significant down payment as well. But
Yeah.
those aren't horrible trade-offs, right? To
Hmm.
get you in a home that you love, to get you a refinance if you absolutely need to refinance, especially if we can get you into a regular loan a couple years down the line. And that's a benefit of using someone like Sean, who is a mortgage advisor. He just doesn't do loans, you know. He's a mortgage advisor. He's going to look at your situation and say, maybe a bank statement's good now because we can refinance you in a couple of years. So it might be worth taking a little bit of a hit for a year or two.
Mhm.
So that's the benefit of using professionals as well.
Yeah. Don't downplay yourself. Obviously, you're in that same boat too, Jesse.
Yeah,
So
I appreciate it. Yeah, and
yeah.
that's it. I mean, bank statement loan, it's a great alternative. It's not for everybody. It's not the perfect situation, but you need to talk to your mortgage broker, your loan officer, like Sean or myself, and see if it's a good alternative for you.
Yeah, yeah, and hey, for anybody else, any other loan officers, mortgage brokers, if you see anything we've missed, throw it in
Yep,
the comments. By all means, we want to just spread knowledge, and maybe
exactly.
we'll pick something up from you guys along the way as well. Thanks so much, everybody.
Yep. All right. Take care. I'll see you soon, Sean.
Like and subscribe.
Yeah,
All
exactly. All right. Bye bye.
right, see you, man. Bye bye.